Microcap stocks are smaller than small cap stocks, and thus would be expected to pay more of a risk premium. In this video, we'll check out the best microcap ETFs and explore the problems with the cap size. Why would we be interested in microcap stocks in the first place? Microcaps are somewhat of a forgotten segment of the market, as these stocks are the most volatile, and there aren't many products available to capture them. First, remember the size factor premium. Small stocks tend to outperform large stocks because small stocks are riskier, so investors are compensated for that risk. Microcaps have indeed outperformed other cap sizes historically. Secondly, remember that factor premia tend to get stronger as we go smaller. That is, factors like value and profitability tend to pay higher premiums and are more statistically significant in smaller stocks. This is why small cap value is usually the golden child of the market. Lastly, microcaps per se may even provide a small diversification benefit inside US equities, with an imperfect correlation to the US stock market of about 0.8. So ideally, we'd buy a microcap value fund that captures cheap stocks with strong financials to tilt value and profitability within microcaps, right? Unfortunately, no such product exists unless Dimensional launches an ETF equivalent of their US Microcap Portfolio Mutual Fund, DFSCX, for the public. Since we can't readily access microcap value, we're essentially placing a larger bet on beta by buying a microcap fund. Some even consider microcaps a proxy for private equity, with comparatively greater transparency and liquidity. The problem with most microcap funds is that they're usually not really microcap funds. This is because microcap stocks by nature aren't very investable due to their relative illiquidity and extreme volatility. Ironically, the theory goes that microcaps pay a significant premium precisely because of that illiquidity and volatility. Moreover, the policies of asset management companies typically prevent fund managers from buying these illiquid, low price per share stocks. Active funds that have emerged over the years to buy true microcap stocks are either closed to new investors, are unavailable to retail investors, have high minimum investments, and or command extremely high fees. Examples include WMICX, the Wasatch Microcap Fund, RYOTX, the Royce Microcap Fund investment class, DFSCX that I mentioned earlier, the Dimensional US Microcap Portfolio Fund, and BRSIX, the Bridgeway Ultra Small Company Market Fund. WMICX has far outperformed the others on this list historically, but it comes at an astronomical cost of 1.66%. Feel free to research these options. For ones like BRSIX that are open to new investors, minimum initial investments may differ among different brokers. Now let's check out options for microcap ETFs. There are currently only 3 microcap ETFs available, all of which are suboptimal and bittersweet in their own way. First is IWC, the iShares Microcap ETF. IWC is by far the most popular of these 3 microcap ETFs with nearly $1 billion in assets. IWC seeks to track the Russell Microcap Index, which sounds nice, but this is simply the smallest 1,000 stocks in the Russell 2000 Index. Thus, by definition, these are not true microcaps, so the fund skews more towards small caps. Ideally, we're looking for a weighted average market cap below about $300 million for true microcaps. The weighted average market cap of IWC is $750 million. Moreover, this pseudo microcap exposure comes at a relatively high cost of 0.60%, so we're paying much more for exposure that's not really what we're aiming for. In short, I'd rather just hold a cheaper, more liquid, normal small cap value fund. Next up is FDM, the First Trust Dow Jones Select Microcap Index Fund. Popularity and liquidity drop off steeply after IWC. FDM has an AUM of about $150 million. FDM seeks to track the Dow Jones Select Microcap Index. While IWC has over 1,000 holdings, FDM only has about 150, so it's arguably less diversified and differs in sector weightings. FDM also still has a higher average market cap than IWC at about $820 million. However, FDM at least screens for liquidity and strong financials, while IWC does not. As a result, FDM has comparatively greater loading on value and profitability with a similar loading on size, which means greater expected returns over the long term for FDM. FDM has the same fee as IWC at 0.60%. I'd take FDM out of the two. Last on our list is DWMC, the Advisor Shares Dorsey Wright Microcap ETF. First, note that DWMC has low volume and AUM. The fund launched in late 2018 2018 but hasn't taken off at all. Its AUM is only a little under $5 million. That's million with an M. As such, the fund may be at risk of closure any day. DWMC is an actively managed ETF, but it employs rules-based selection based on price momentum, so it's not truly active. Unlike IWC and FDM, DWMC doesn't really care about liquidity, profitability, etc. It's seeking out volatile microcaps. This increases management costs, which shows up in the fund's high fee of 1.32%. DWMC has outperformed the other two funds over its short lifespan on both a general and risk-adjusted basis. Like FDM, DWMC only holds about 150 stocks. Its weighted average market cap is about $950 million. I'd be worried about the fund closing, but even if I were open to paying 1.32% for DWMC, I'd probably rather save up the minimum initial investment for one of the mutual funds mentioned earlier. On paper, the microcap equities segment looks like an extremely attractive investment. Unfortunately, at this time, the attempts at implementation fall extremely short, with no great options readily available to retail investors. Most microcap funds are not truly microcaps, and nothing exists to specifically target microcap value. If I wanted to place an expensive, highly volatile bet on microcaps, I'd aim for one of the mutual funds mentioned earlier, but I'd be more tempted to wait around with the hope that Dimensional launches an ETF equivalent of their microcap fund DFSCX for the public. I mentioned earlier that we should arguably just prefer a simpler, cheaper small cap value fund. Click here to watch my video on the best options for those. Do you own any microcap stocks or ETFs? Let me know in the comments. Thanks for watching.